Managers. Always a pleasure to speak with Manish because of the clarity of thought that he brings to the table. Manish, welcome and good morning to you. Let me start with this. Are you less concerned than you have been at any point during the conflict so far that there will once again be kinetic warfare, there will once again be a problem? And how are you looking at this entire crude and energy situation? Is it going to be a problem in Q1?
Yeah, so we are always hopeful that we'll see a diplomatic solution to this whole stalemate that's going on. But till about the point in time when everything is settled, we can't be very sure because it's one day one thing, the other day the other thing. So till about that point in time, it's better to be cautiously optimistic. See, oil is going to be a problem if we don't see a diplomatic solution by the month of June. This is my understanding. For the simple reason is that supply chain disruptions in the production side of oil in the Middle East is just too big to get ratified very, very quickly. And what the entire globe is leaning on today are the inventories in the system, and more so the onshore inventories in the system, which are getting depleted on a daily basis because the world is consuming oil. And the criticality or the critical levels of these oil onshore will get breached in the month of June if normalization of some sort of supply doesn't happen by the month of June. So today, even if the stalemate continues, we have seen $125 crude, and currently we are hovering at around 114, 115. But we are not seeing a massive spike beyond 125, even though Strait of Hormuz stays closed, and we are not seeing any solution come by as we speak. Even there are a lot of talks, but this 125 gets breached in the next 1 month if there's no solution. That is the understanding. And once that happens, then it's a full-blown inflation shock, energy shock translating into inflation and growth shock globally. I mean, that's how I would look at it. So it's better to be cautiously optimistic at this point in time.
Manish, hi, good morning. Tamanna here. Just want to talk a bit about IT and banks. The Indian IT sector seems to be resilient in different ways. It keeps getting the confidence of investors back time and again, despite every new release by Anthropic, etc. Do you think that Indian IT has now more legs to go? Is that something you're looking at favorably?
See, AI is on us, that is for sure. It's going to be relevant in the context of IT. But, Indian IT has got derated massively. Hirings are not there. We have de-hiring or layoffs that is there across the globe. Anthropic comments on a daily basis, now they seem to allude. Last night's commentary is saying that enterprise software on AI will be executed with hands, which is manual hands, which is to say that companies like, IT vendors like Info, TCS, etc., will be relevant in the implementation of enterprise AI. There's no blanket, incorporation of AI just about as the product is there. You've got to customize it to the enterprise needs per se. So system integration is going to be there, and third-party IT vendors like Indian IT is going to be relevant. Prior to this commentary, it was widely believed that this is going to be massively disruptive and enterprise AI is going to be taken off totally. So that's basically the bullishness that we are seeing today. Nonetheless, the valuations had come off massively, and I had alluded to in the past also that zero growth means a 5 to 6% free cash flow yields. Some of the known names in the IT space are trading at those valuations today, which means that Indian IT today is reflecting zero growth, whereas you are still going to see some growth on a constant currency basis, low, single-digit sort of return, and currency depreciation added on to that. So ballpark 8 to 10% INR growth is par the course, whereas the markets today are pricing in zero growth. So you have valuation comfort, and new commentary from AI like Anthropic is basically supportive of valuations and the growth for Indian IT. So that's the bullishness that we are seeing.
Got it. Well, 1.8% up. Manish, just a follow-up here, and which is this, that if Anthropic is coming out and trying to do exactly what the IT service firms have done for years, and doing that with the advantage of owning a large language model, wouldn't that eat into that business? And shouldn't that therefore be a medium-term negative? And shouldn't the markets factor that in, never mind the valuations?
No, so competitive intensity is going to be there. But Indian IT businesses have, track record, legacy, and their businesses aren't going to fall off a cliff. You may say that they will come down on a trajectory slope on the downside, but it's not going to be a massive 90-degree perpendicular on the downside. So competitive intensity will be there, and more so on account of their own enterprise system integration tools, etc., which the AI guys will be having. So we have to be more competitive. That's part of the course. That is always there. Indian IT always adapts itself around the new technology. So that is basically the point that can be argued, to that point that these guys are going to have their own enterprise system integration softwares.
Okay, just want to understand about the BFSI space, Manish, and what the government has now announced in terms of the ECLGS scheme and some buffer really for MSMEs. Does it relieve concerns that we may see the impact of the West Asia crisis on smaller companies and then on asset quality in the next 6 months? Is this enough?
Yeah, so this is the beginning, and obviously if this whole resolution doesn't happen, then there's going to be a problem on the cost of credit as well as the quality of credit in the next 6 months. That's for sure, and that is why this ECLGS scheme comes in handy at this given point in time. And but as of now, the credit cost is holding good. So let's assume for a moment that in the next 1 month, you are going to see some normalization of the West Asian crisis. Then obviously the damage is mitigated. But we could expect more if this gets prolonged into the future from the government. As we had seen during the COVID times also, government always comes out with a helping hand for the MSME space with, loads of moratoriums and all of that. So this is maybe just the beginning, but, the numbers, etc. for the BFSI space is pretty good. There's no credit or asset quality concerns so far, either on the corporate side or on the retail side per se, and even the MFI space is now turning the corner. So credit growth in the system FY27 is going to be better than FY26, 13 to 16%, depending on what you believe is going to be the number. And it's a proxy, it's an India proxy, beta play. If you are looking at a beta play, then BFSI is the beta play when it comes to India proxy. So all of these things are contributing to the bullishness.
Okay. Manish, thanks so much for taking the time out and giving us that perspectives, or those set of perspectives, if you will. Really appreciate your time this morning.
Thank you.
All right, we will dwell a little bit on